The bull party continues, and the S&P 500 bulls now have 6,000 in sight. They have a hit rate of 95%, or we've closed higher 21 out of the last 22 weeks. And this is really incredible because now we're hearing that it's time to run with the bulls. Don't worry until we get to at least 6,250. There's that number 6,000. No one wants to be on the sidelines because the S&P could rally to 6,000 by the end of the year. Whoa. And then Goldman Sachs tells us that we could reach 6,000 this year if big tech keeps impressing. Wow. So what's happened? Well, everyone is increasing their end of year price targets. Oppenheimer is raising it, HSBC is raising it, and it's the great chase of the bulls. And this has been some bull market. Everything is rallying. So stay tuned. I think we have a great show for you. We're going to go through the keynotes for the month of April, including this really important note right here. We're also going to go through and talk about the levels for the S&P 500 right now. That is going to be a green light for the annual, and we're going to open in a yellow light for the new month unless we get a gap up. Same thing for the NASDAQ, green light and yellow light. And then we're going to go through and talk about charts at the end of the show, like the S&P 500, the NASDAQ. We're going to go through and look at some strong charts like RSP, which is actually higher than the S&P and the NASDAQ. We'll also talk about financials, or XLF, which is now in blue sky territory, and again, also doing better than tech and the S&P. Some stocks will look a little bit soft, include XLK or mega caps with a failed breakout. And we note that XLU is trying to break out, get it back above its short-term price, or the 50 MA, as regional banks try to get back above their IPO high in roughly 2008. And we note that EEM, or emerging markets, are starting to look like they're spicing up. That looks interesting. And then is the stinky arc going to finally break out? Man, this chart is sad. It's a massive head and shoulders, and it just looks like it wants to go down. All right, so I think we have a great show for you today, like I just mentioned. And in return, all I ask is for a simple favor. If you guys could please just consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. So like the title of the video suggests, a 95% hit rate is pretty good. But this week, things are going to be interesting because if we're going to print a weekly lower low, it's only going to be about 5 points lower at 518, which means we can't really afford to go down. So we want to be very receptive to what these levels mean on the monthly charts. And like I said, we're going to go through that in a few minutes here. If we look at year to date, oh my goodness, NVDA is up by 83% and Meta's up by 38%. So some strategists are saying that the Magnificent Seven, it's more like the Blazing 2 or a tepid 5. This is important because if we're going to see more charts get bullish, we want to talk about where people are positioned, because risk appetite is now at the highest level since November of 2021. Global growth expectations are at a 2-year high. Stock allocations are at a 2-year high. Big rotation into Europe, emerging markets, and financials. We just looked at those charts. They look pretty good. And if we continue the story, if we're looking for Q2 setup for stocks, right now we got energy, materials, and utilities leading the charge. All of these things would do well if interest rates are going lower and if the economy is getting strong. This looks like rotation. Keyword here being rotation. So these are the 1-month sector leaders. Goldman Sachs also says that commodities are going to benefit as central banks cut rates. So they're pretty much telling us that it's time to get bullish, right? The Fed's going to be cutting. And this is at a time when we're now getting an annualized return of 25% since 2020. That's very impressive. 25% per year is more than 2 times what we normally return. It's about 3 times higher, actually. So the S&P 500 is close to its 12th strongest Q1 since World War II. Wow, that's very, very impressive. It's also the best quarter going back to 2019. Remember, we closed out the week, the month, and the quarter on Friday. Yesterday on Thursday. Today's a holiday. Yesterday was a holiday. This is getting published on Saturday. And April is typically the 3rd best month of the year on average. We've bucked the market so far this year. And hey, if the bulls are going to run, well, let them run. Let them let their hair down. Let's go to new all-time highs. And this is really important because we've been talking about a very simple quote from, I think, the legendary investor Warren Buffett. The market is a device for transferring money from the impatient to the patient. So if all we did was listen to that one thing Justin kept drilling into us, is that strength gets you more strength. An object in motion tends to stay in motion until we get an unbalanced force. And right now, that unbalanced force is just incredible strength, higher highs, higher lows, and it's just really been impressive. So we went back to look at this chart, and it shows that this is from Fundstrat and Tom Lee. And it shows us that we could have continued strength going all the way until April. And Jerome Powell spoke on Friday. So it looks like he declared victory on inflation. And this rally doesn't have to just fizzle out in April. Where could it go to? Well, on a previous video, we went back and showed you how it could actually go for 39 weeks. And that could be all the way until September of this year. Whoa, that's like a long time from now. And if it's 1995, after we make a new all-time high, we could go higher by 220%. That also sounds pretty bullish. If we go back here to the chart I shared at the beginning of the year, I'm also talking about higher lows and higher highs. And this went all the way to September as well, ironically. And this was looking for a rally up to roughly 5,600 for my target, or the 161 extension, or if we repeat 2020, 6,200. That 6,000 number keeps coming back more and more. And a lot of market veterans were maybe on the wrong side of the trade. And what are they doing? Well, they were wrong, but they don't want to stay wrong. Chase CEO Jamie Dimon and billionaire hedge fund manager Ray Dalio both admit they got warnings on U.S. economy wrong. Hey, at least for now. Why? It's looking like it's a lot more like 1995. Ray Dalio is also telling us that the U.S. stock market doesn't look very bubbly. Okay, cool. That's great. All right, we want to go up. The S&P 500 is about to wrap up the quarter, which it just did, with a 10% gain. I think it was like 10.0 something percent return. Resist the urge to time a pullback. Okay, well, we showed you all this strength that is all building up. So what's a pullback? Well, a pullback is roughly 5% or more and occurs roughly 3 to 4 times per year. This will be very important because when we go to our notes here, which I'll come back to in a moment, a 3% drop would get us to a monthly higher low, but an 8% drop would get us back down to 480. So if we do take a pullback right now, we're looking for key areas. We talked about that. But the weekly chart will give us a warning first. Why? Because we're going to break the weekly low here at 518 before we go back down to 532, which is a monthly higher low. Stock market corrections are not uncommon. And how often they happen? They're pretty often. So, right, figure one stock market pullbacks of 10% happen in 10 of the past 20 years. So, right, it's only 50% of the time, flip a coin, but these pullbacks do happen a lot more frequently, right? We haven't even really had, I think, like a 3% pullback ever since we had the rally start here in October. I think this was a 2% pullback. We've not really gone down. The market is just blazing higher. And this is really interesting because right now we're seeing that the chip stocks relative to the S&P are actually making a new all-time high, even higher than 2000. And what Jerome Powell said this week really matters. So he's saying that inflation views stay unchanged despite recent data. And then he spoke again on Friday. We got the dot plot from the FOMC. You can pause the video if you want to read these things. But I think he's laying the groundwork for a cut. The question is, how many? Right? In 1995 soft landing, the Fed cut, then held for 3 meetings. And this would be good because it means it's 1995. And this week we saw, this is Bostic from Atlanta telling us that he anticipates only 1 rate cut this year. Hey, it's looking a lot more like it's 1995. Maybe the bull party can continue for 4 more years and we go up 1 to maybe a couple 100%. There's also $6 trillion sitting on the sidelines, which should help stocks. They've helped them so far. And we also talked about how cracking 5,000 or a round number usually means we're going to go up. We also talked about how returns after a new all-time high in a bear market, it was about 16%. We're almost there, right? We're 10% higher. We also talked about the stock market indicator, which had 100% accuracy since 1957. The signals a big move. Well, the big move kind of happened. And it tells us that over a 24-month period, the market's always been higher. It's incredible, right? It seems so bullish, and people still don't believe it. Immigration could also boost the U.S. GDP by $7 trillion over the next decade. There's a lot of really good bullish things that seem to be happening right now. So the theme for right now is that we have blue skies and those lists keep growing. We want to also think about the theme of higher lows and higher highs, because if it continues, it just means we're seeing more strength, which means that Newton's first law is still working here. Remember, if we remain in monthly higher lows, we remain over the 480 all-time high. That's bullish. So if we go back here to SPY, all that means is that right now, if we keep our monthly higher low intact at roughly 505, 504, it means that we're going to be above our 480 previous all-time high. That's super bullish. So we want to keep that in mind. What's also really important is that right now we are likely to make a monthly higher high because we only need Where did we close? We closed at 523. We got to make it to 524.62. We have to rally by about $1.50-ish. And that'll be interesting because the inflation report from Friday was quite interesting. We can see here that it came in at 2.8 and 0.3. Previous numbers were revised higher, but what Jerome Powell had to say was that the bullish stock narrative seen intact after US inflation data, which means, hey, we're probably going to keep going up. So if we gap up above 525, the question will be whether or not we hold it. And because we're closing at or near the high of the candle, that usually implies upside momentum. So by closing at the high of the candle here, what we're basically being told is that we're likely going to form that higher high. The question is now, is it going to hold, right? Do we hold it? We've been overbought since December. Down or sideways with time can burn off these overbought conditions. We're going to get a warning with a weekly lower low first before we go down to that 3% drop to the monthly higher low. So let's keep that in mind, right? We got key levels here, and I will update you throughout the week. So maybe that's a great time to consider subscribing to the channel to not miss one of these videos. We also talked about percent returns like 150, 220. It's just incredible. And then, as we said, we're going to be entering a yellow light. So it's really easy. If we're over 525, pedal to the metal, let's go fast. If we fall below 525, hey, caution, doesn't mean exit. We exit when we get a lower low below 504, which means the rally's starting to fizzle. So that weekly lower low could happen. But unless we get below 504 here on the S&P 500, there's nothing to worry about, in my opinion. And then for QQQ, a little bit more room. We got a rally by, I believe, about, how much is it here? We're at 444. So we have to rally up to 450, roughly. And the NASDAQ's not been very strong. Again, XLK closed with that fail breakout. So that's really what I wanted to go through. And the analysis for the last couple of charts here is really like, man, like ARK has been such a dumpster dive for so long. I'm not sure where it's going to go. So the video is now starting to get a little bit longer. But what I want to leave you with is that if you want to see more live chart analysis, come hang out with me on Monday at 9:15 a.m. And I'm going to take you through the market open with chart analysis and more updates on what Jerome Powell had to say. Otherwise, I want to thank you very much for tuning in, and I look forward to seeing you on the next video. That'll be here on the left-hand side. And if you want to subscribe to hang out with me on Monday, that'll be here on the right-hand side. Thank you very much. I'll see you on the next one.